Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Tuesday, April 14th. Firstly to the Euro US dollar, and here we've seen a change of trend in this market today. The candle that we're analysing is this white body candle here, the second last candle on the chart, and it shows that the buyers have closed with control. They have lost some commitment as evidenced by the shadow, but they've actually built some upside momentum in terms of establishing a white body. For the past 6 consecutive trading days, we had black body candles with the sellers taking various degrees of control, and on that final candle before today's session, we saw the sellers lose control and the formation of a small black body candle with a larger shadow on the bottom of the body of the candle. It suggested that there was a good opportunity for the buyers to come back into this market, and it suggested that the sellers were starting to lose the strength that they had following the breakout down below the 107.60 level. This was a hammer type of pattern, not quite perfect, but at the end of a trend with the small body and the larger shadow on the bottom did suggest that the sellers had lost a lot of commitment. And today we're seeing confirmation of that change of trend with this large white body. So a build of momentum from the buyers, taking back control of the market in a strong manner, and suggesting that there is a very real possibility of the market trading to higher levels. Now, the problem here for the buyers is going to be the resistance at the 107.60 area, previous support, and with the combination of the Kijun-sen trading very close there at 107.54 and the Tenkan-sen just above there at 107.77. The buyers are going to have to be very, very strong to breach this area, and there's a lot of doubt about whether they will be able to. Now, the key here is to watch how the price action reacts around that level if the buyers do test up to there in the next trading session. As we watch this new trading session develop, we are seeing some selling coming into the market. So we're not seeing any strength from the buyers at the moment, but it is quite early in the session. If we do see the sellers re-enter the market, there's a likelihood of the market testing down to around this 104.14 level. In terms of Ichimoku, a bearish market in all three timeframes, trading below the cloud, the Kijun-sen and the Tenkan-sen. We have seen the market breach down through this wedge type pattern and hasn't met the target, and a likelihood with the trend being down in all three timeframes that following this rally we're likely to see the sellers come back in and test to lower levels. Just moving next to the Fibonacci retracement, and if we look closely here, the candle before today's session suggested that there was a possibility of a change of trend. We had the market interacting pretty much at the low with the 161.8% level. We had an expansion, and the market failed to retrace. It traded through the 100% level, testing to that 161.8% level with the larger shadow on the bottom, highlighting the lack of commitment from the sellers in this candle, the sellers losing control in that candle, and then confirmation of the change of trend today. Now that we have the formation of a new first time frame uptrend, we can actually look at the potential retracement of that previous first time frame downtrend. And interestingly, the market tested just to... Sorry, I had that the wrong way around. Interestingly, the market has tested just to the 38.2% level, and we've seen some rejection from that area. Also testing above the 23.6% level and just closing around there. And the rejection from the 38.2% level just does slightly hint that we could see a change of trend, but with this being a fairly large white body candle and the buyers building some strong momentum, I'd say that there's not as great a chance of the market retracing and changing the trend back to the downside as there is of the market testing up to the resistance around the Kijun-sen and the Tenkan-sen. Now, just looking at our bands here with the Euro US dollar, and here we see the band squeezed up, and that's because basically we've seen the market trading within this range. We saw previous downtrending price action following the breakout from another range, and then attempting to rally, forming a range here, and closing outside of the bands, but not in a strong bearish manner. These two black body candles, we saw the reduction in the size of the black body, so not a lot of faith in the indications there, with that being a strongly negative market. We then saw for today's trading the market rally, but the important thing here was the resistance at the bottom band, trading around 106.67 at the moment, and that's going to be a very, very important area. As we see this new candle develop, we are seeing some rejection coming into the market, very close to that bottom band at 106.67. And if we see a strong bearish close down below the bottom band and then strong bearish follow through, and I say we'd probably prefer to see the market take out the swing lows here around the 104.50 level, 104.56 area. If we do see some strong bearish activity down below the bands. So that's going to be a very important benchmark there, the swing low here about 104.56. Now moving next to the hourly chart with the Euro US dollar, and for today's session we saw the market begin trading down below the Ichimoku cloud once again. We have been trading down below there, and that's when we saw the market selling off and the bearish bias in that longer term time frame. The market did test down through the middle pivot point level to find some support close to that first pivot point support level, not quite reaching there, and we saw the indecisive candle develop as we tested down very close to there. Not a lot of strength as the market attempted to rally, and the market had trouble breaching the middle pivot point level with the Kijun-sen and Tenkan-sen trading around that area. But then after the midway through the session, we then saw the buyers coming into the Euro US dollar quite strongly to breach the Ichimoku cloud and give us a bullish market in that longer term time frame. We then saw the market testing up almost to the third pivot point resistance level. And it's not often that we see those third levels tested. When we do, it tends to be an extreme day. And the session after that, we do tend to see a market that's probably isn't as dynamic as the day prior to it. We tend to see the buyers want to relax and some profit being taken, and we don't see a strong sell-off necessarily, but this does suggest that we're not likely to see the market as strong as the previous day, but we are still likely to see the market trend up. Now at the moment in this new session, we've seen the market open above the Ichimoku cloud once again and above the Kijun-sen indicator, but retracing back towards that middle pivot point level, finding support there for the past couple of hours, and just below there the Kijun-sen is going to be very important, trading at 106.18, acting as some strong support. The barrier to the upside at the moment is the Tenkan-sen indicator trading at 106.48, and I suggest that if we do see the market breach through that level, we certainly could see the Euro US dollar testing up to the first pivot point resistance level at 107.30. Some doubt whether we will trade up to the second level at 108.07, and I very much doubt whether we will see the third pivot point resistance level touched at 108.85. If we do see the market breach the Kijun-sen, we could see the market testing down to the Ichimoku cloud, and we have potential support through the cloud down to about the 106 area.